are saying as well. But first things first, let's take a look at what Wall Street really did. And during Thursday's regular trading session, what you really saw is that investors snapped up shares of big tech names, the likes of Nvidia, lifting the S&P 500 as well as the NASDAQ composite for a fourth consecutive day. So those are the kind of gains that we saw come in for all of those indices. The broad market index is now down just about 0.9% in September and stands about 1.3% from its record as well. When you take a look at the 30 stock Dow as well, you're looking at advances coming in of roughly 0.6% thereabout, bolstered of course by Salesforce and Microsoft. So that's the kind of move that you've seen come in for Wall Street. Wall Street is now looking ahead toward the Federal Reserve's policy meeting as well on September 17 to 18, and that is something that we're keeping a very close eye on, because the central bank is largely anticipated to lower interest rates by 25 basis points. Now, of course, currently the Fed's target is sitting at 5.25 to 5.5%, and these are the kind of expectations that we're penciling in at this point. But when you take a look at the kind of moves that we've seen this month as well, the three major averages are also on track to post weekly gains. In terms of the S&P 500, you're looking at gains of about 3.5%, NASDAQ on track for a 5.3% jump. And when you take a look at Dow as well, 1.9% week-to-date uptick is what you're looking at as well. On the economic front, of course, traders will be looking toward August's import prices data and preliminary consumer sentiment figures for September also that are on deck. So those are the kind of numbers that we're also keeping an eye on. And let's also take a very quick look at Europe then, and European markets rose on Thursday as investors in the region also digested the ECB's move to further ease monetary policy. So those were the kind of moves that we've seen come in for Europe as well. And this is the kind of handover that we have bright and early this morning. Let's also take a quick look at what oil is doing and what kind of moves we saw coming in for oil as well. When you take a look at US crude oil, a jump of about more than 2% is what we saw, and a close above $68 per barrel is also what we were looking at. Now, when you take a look at WTI, you're looking at about 2.5% uptick coming in there, and year-to-date US crude oil has although fallen nearly 4%. When you take a look at Brent as well, $71 per barrel levels is what you're looking at. So an uptick of about 1.9% there as well. And year to date, the global benchmark has also dropped 6.6%. Now, the kind of moves that you've seen, largely the kind of reasons that you have is that US crude oil has been jumping after the Hurricane Francine churned through the Gulf of Mexico, also disrupting oil production before making landfall in Louisiana. So more than 730,000 barrels per day of oil in the Gulf of Mexico is currently shut in, and that's the kind of, and because of that, you've seen the kind of impact that I've talked about, 2.5% uptick for WTI and 1.9% uptick coming in for Brent as well. So those were quite the moves that we saw coming in for oil, Snehi.
Absolutely. Well, lots happening in terms of global equities as well as commodities. Hi there, good morning. Let's take a look at some of the important events to watch out for in today's trade. Lots is happening when it comes to the macroeconomic data front back home. After we had the CPI yesterday, we have the WPI data coming in today as well as the forex reserves. From the US, however, you have the Baker Hughes oil rig count. Eurozone and Japan, both today you have industrial production data coming out. So keep a close eye on all of these macroeconomic indicators in today's trading session.
If you like this video, then like, share and subscribe to ET Now.